Hello Dividend Dreamers. Today's discussion is a long-awaited deep dive into a pivotal move that has been on our radar, SATS acquisition of Worldwide Flight Services, WFS. The acquisition, valued at a hefty €1.3 billion, is a game-changer set to reshape the landscape for SATS. Let's explore the intricacies of this major move, assessing its potential impact on SATS' future and unraveling the layers of this transformative acquisition. The timing might be fashionably late, but it's never too late to dissect a significant game changer that will redefine the very essence of SATS. Let's dive in. Overview of 2Q FY24 performance. Before we delve into the impact of the WFS acquisition, a quick recap of SATS' 2Q FY24 performance reveals mixed results despite being impressive at a first glance. The company witnessed a substantial surge in revenue, nearly tripling year-on-year and growing 6.9% quarter-on-quarter to reach 1.3 billion Singapore dollars. Despite a significant rise in operating expenses, SATS turned its operating income around from a loss of 8 million Singapore dollars in the same period last year to a profit of 65.5 million Singapore dollars. SATS has been strategically leveraging its global networks, particularly in its cargo business. Key indicators such as aviation food, passengers handled, and flight volume surpassed 80% of pre-COVID levels. Cargo volume, a critical aspect of SATS business, reached an impressive 93% of its pre-COVID levels. The International Air Transport Association, IATA, noted a positive trend in global cargo volume growth, signaling encouraging prospects for SATS cargo business. Despite a turnaround in net profit to 22.2 million Singapore dollars in 2Q FY24, there are concerns about the mix of results. Food Solutions remained in the red, contributing to an overall operating margin of just 0.3%. Operating profit excluding contributions from Worldwide Flight Services, WFS, was 3 million Singapore dollars, suggesting challenges in the core business. Now, let's connect the dots and examine how the acquisition can contribute to this narrative of recovery for SATS. The strategic WFS acquisition. SATS, renowned for its food solutions and gateway services in Asia, welcomed WFS into its fold through a €1.3 billion acquisition. Approved by an overwhelming 96.8% of SATS voting shareholders in January 2023, this move created a fully owned subsidiary headquartered in Singapore. WFS, a global leader in air cargo logistics with ground handling capabilities, brought a wealth of opportunities and a global footprint of 201 cargo and ground handling stations in 23 countries. Now, let's unravel the motivations of this acquisition on SATS over the long term. 1. Global network expansion. The combined SATS-WFS network spans strategic hubs in Asia, Europe, and the US, along with new growth markets in Latin America and Africa. This expansive network covers trade routes responsible for over 50% of global air cargo volume, creating opportunities for heightened service delivery. 2. Earnings growth and resilience, anticipated to increase SATS EBITDA by 100 million Singapore dollars through cost-cutting alone. The acquisition is set to fortify SATS business resilience. By diversifying revenue streams and reducing exposure to cyclical aviation demand, SATS aims to navigate economic uncertainties with increased agility. 3. Technology and service innovation. The synergy between SATS and WFS extends beyond logistics. The joint focus on digitalization, ESG initiatives, and technology and service innovations aims to reshape the landscape for their customers. Cross-selling opportunities and synergies across the combined group are poised to foster enhanced customer satisfaction and operational efficiency. The Dividend Uncle's take: successful integration will boost profitability but challenging. Now, let's dig into the nitty-gritty of SATS' potential love story with Worldwide Flight Services, WFS, and let the Dividend Uncle explain the stars that must be fully aligned in order for this romance to bear fruit. Firstly, strategic alignment. Successful integration often hinges on strategic alignment. SATS, a key player in food solutions and gateway services in Asia, seemed to be matched perfectly with WFS, a global leader in air cargo logistics. But realizing the potential synergies between their expertise requires a seamless integration process. Secondly, global network optimization. SATS aims to optimize its global network by leveraging WFS's extensive reach. This presents an opportunity for SATS to enhance its service offerings and operational efficiency on a global scale. Thirdly, cost-cutting measures. The anticipation of an increase in SATS EBITDA by 100 million Singapore dollars through cost-cutting measures will be significant, but the attrition of staff and uncertainties involved may affect morale. And finally, diversification and resilience. By reducing exposure to cyclical aviation demand, the combined entity can navigate economic uncertainties more effectively. Now, this is where the good news ends. While the potential for successful integration and synergies is evident, my view is that the journey ahead for SATS and WFS is fraught with many challenges, some of them potentially major. The effective amalgamation of diverse operational models, cultures, and technologies will be pivotal, but extremely difficult. The path forward is likely to involve many hiccups and hence volatility in share price and financial performance. At this moment, despite of the opportunity to invest in a developing global leader at an early stage which can be rewarding, I have decided to stay on the sidelines. As investors, it's crucial to keep a watchful eye on the execution of integration plans and the realization of synergies. I will monitor SATS' ability to seamlessly weave WFS into its fabric before deciding the true impact of this acquisition on long-term profitability. SATS' strategic acquisition of WFS emerges as a transformative force, opening avenues for sustained profitability. The global network expansion, earnings growth, and a focus on innovation position SATS at the forefront of the aviation and cargo industry. As we navigate through these developments, stay tuned for more updates, and until next time, happy investing.